Okay, welcome to chapter 3 in our day trading with volume profile and order flow course. So in this video, we're gonna give an introduction to volumes and why they are so important for the type of trading that we're gonna do with order flow and intraday operations using volume profile. So out of all the different factors that traders use in technical analysis and elements, volume is probably the most important and often overlooked. Volume will confirm trends, chart patterns, and indicate when momentum is coming into the market. So if we read volume correctly, we can tell when there's buyers or sellers flooding into the market, and we can preempt when a level is possibly going to be breached and we're going to have a breakout when volumes start building up. So by volume, we understand the number of shares or contracts traded on a particular period. To have a most precise measurement of volume, we want to use exchange traded assets such as stocks, futures, commodities, options, and ETFs. And this is why I talked before on the previous chapters about why we choose this type of markets, because we have very accurate volume readings. This is because since all trades go through one central entity, for example, in futures, we have the CME, the Chicago Mercantile Exchange, then we can have an accurate measure of total trading activity and open interest in that particular market. Open interest is very related also to options, where we can see how much liquidity or how much volume of orders we have resting at different price levels. Markets such as Forex and crypto are decentralized, or what we call OTC, over the counter. This means that there's no universal track of traded volumes, but rather partial volume figures have to be taken as a proxy for the overall numbers. These figures can either come from a specific market maker, broker, or liquidity aggregators. So that's what I was telling before, why Forex is not, OTC Forex is not really ideal for trading with order flow, because what we're getting is just volume figures from a specific broker or a company, etc. It's not a clear reflection of the universal trading volume that is going on. And the same with crypto. We can use, as I'll talk later, it is possible to use some cryptos with high volumes on very large exchanges. People are starting to use those more and more with order flow and volume profile intraday tools. But in general, any decentralized market is not really going to give us a good universal volume reading. In general, when we are in an uptrend, we want to see higher volumes coming in as a sign that there is real buying interest, higher buying volumes in that instrument. And the same for a downtrend, where selling should be increasing the lower price goes. So if we're in a downtrend and price is going down, we should be seeing higher selling volumes go with it. If we get a divergence where price is making new highs on lower buy volumes or new lows on lower sell volumes, then that can be a warning that momentum is cooling off and a reversal could be in play. So what do I mean by that? If we see that price is just making record all-time highs, but the buying volumes are slowly waning, that's a sign that we could just be having a blow off top and a reversal could be coming, because there's simply no more high volume interest at those elevated prices. So unlike most indicators used by traders, volumes are the most true representation of what traders are doing right now and what trades are doing right now. It indicates sentiment at the present moment, with no hindsight or processed back data. So we are not getting late signals, but a true view of what the market activity is at that moment. So, if you're familiar with indicators like MACD, RSI, stochastics, even moving averages, we're basically taking past data, the closest of candles, and just processing it through formulas to come up with different averages, percentages, etc., to try to generate some kind of predictive nature where we're going to see what's going to possibly happen in the future. With volumes, we're really just looking at real live data as it happening, telling us what buyers and sellers are doing at that moment and what amount we're having of each one. Okay, and over here, sorry, it just took a little moment to load up. So here we have a chart representing two types of volumes that we have. So on the bottom here, we have time-based volume. So this is the most classic, typical volume that we are used to seeing on charts. It is plotted on the horizontal axis, on the price and time, on the time and date axis. And basically here we have the E-mini S&P 500 futures 1 hour chart. So each candle is 1 hour. And as you can see, we're simply looking at how much buying or selling volume we had in each candle. So if it's a green candle, it's going to be green volume. If it's a red candle, it's going to be red volume. And we can see how when we have high candles, it's usually because we have high buying interest. And like we said, we want to see prices going up on higher and higher buying volume interest. You can also see very clearly here how during the US market hours here, we have the most volume from 9:30 a.m. to 4 p.m. Eastern time is when we have the maximum volume activity in futures. And we can see how, candles and volumes correspond with each other. And we can see, in this case, you can see how we made a new high here, but the volumes were overall a little less buying volume. And then we started to go down, etc. On the left side here, on the right side, we have volume profile, which is what we're going to focus on in the coming chapters. And basically this is volume that is measured not on a time-based scale, but we measure it on a price scale on the vertical axis. And what this is telling us is that where we see price consolidating, where we see price traded the most through a certain price, that's where we're going to have buildup of volumes. In this case, I don't have it set to show me buys and sells. You could do that, but as we're going to see later, there's other ways to show this using order flow tools. So I don't need to put this to go into green and red. In here, you would have both. Here, it would show you buyers and sellers per level. But in general, what I care about when I look at these volumes is I just want to see the accumulations. I want to see where was the highest volume points, which is basically where we have the further out points on the charts, which is on the profile, which is where we had the most traded levels of price, as you can see in these examples. Okay, so this is just an example of two ways that we can interpret volumes, and we're gonna go into this in a lot more depth in the next videos. Here we have an example of the stock market. This is the Tesla chart, and what we're showing here is what I was saying before about volumes, how we use them to judge breakouts, patterns, etc. We can see we are obviously on an uptrend, and here we have a classical chart pattern, which would be a symmetrical triangle or a wedge. Mostly looks like more of a triangle where we have price. It's coiling and concentrating between two trend lines that are pretty symmetrical, and when we're getting closer to the edge, we are looking for some infusion of volumes to confirm a breakout either to the upside or the downside. Another characteristic we can see here is how we have volumes are going down as the pattern is consolidating, and this is classic with this kinds of patterns where when price is starting to coil, we have less volume activity until we get to the breakout point, which I have it highlighted here. How we get on this day, this is a daily chart, we had a gap up, markets opened right here, and we came back down, just retested this trend line, and then we got a big infusion of buying, and we just took off and just continued the trend. So this is how volumes can help us also to confirm momentum breakouts. And we're going to go over all this, how we use this in our order flow trading to identify quick short-term opportunities later on in the course. Okay, so that's pretty much it for this chapter on volumes. We're going to start talking about futures, and then we're going to dive deep into volume profile tool.